Everyone's hype in order flow and level 2 data. Is it necessary? When support and resistance were taught almost a decade ago, support and resistance were seen as the floor that institutions are trying to defend. And then the Fibonacci tool was hyped up for a while. It was seen as this divine tool because the Fibonacci sequence exists everywhere in nature, and therefore the Fibonacci tool was promoted as this divine tool that if you use and you enter around the 0.5 and 0.618 levels, you will be entering around this golden level and get somewhat of a divine entry. That's how the Fibonacci tool was promoted. And then the world of traders obsessed for a while over psychological numbers, those round numbers that you see on the chart. For example, the $60,000 level for Bitcoin, or 70,000, those round psychological numbers, because those round numbers were promoted as numbers that institutions used in order to enter and exit their positions. Because when institutions filled their orders on their computers, they would write round numbers instead of writing the decimals. And then ICT and SMC were promoted as guys, this is like the market is controlled by an algorithm and we know exactly how this algorithm works. Let us teach you how this algorithm works. And this is how ICT and SMC was promoted. And now we have order flow and level 2 data, and the way it's being promoted is, guys, you know about the algorithm, you know about liquidity, but we will show you exactly what this liquidity is, and we will show you exactly what those algorithms are doing, and we will show you exactly where these orders are. Everything trended for a while. Every tool that you see today, every trading tool that you see today that gets shit on, was promoted at some time and hyped up at some time like it's the divine tool that will save you from your unprofitability. However, reality is, guys, if I believe that Bitcoin is going to go up from $60,000 to $70,000, then no matter what entry tool I use in order to participate in that move up, I will most probably make money. If I use a support line that Bitcoin rejects and goes up, I will most probably make money. If I use a fair value gap, if I use a trend line, if I use level 2 data, I will make money as Bitcoin is going up from $60,000 to $70,000. As long as I'm a buyer, I will most probably make money in that market. So direction matters a lot more than what entry tool you use in order to participate in that move. That's why when I analyze the markets and write my articles, I focus a lot more on fundamentals and direction, and then use a very simple tool in order to participate in the markets. You don't need to overcomplicate it.